Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Monday, June 4th. Greetings from the Frankfurt Airport. I'm on my way from Katowice, Poland to Chicago, and I wanted to record what we're seeing happening on Friday so we can get prepared for Monday. Well, we did have a number of statistics that came out that I talked about in the advance video, but let's focus on what's happening here. As I said to you before, that when information like we had, the plethora of information we had coming out, it's always 50-50. Fundamental news, we see markets going up on bullish numbers and down on bearish numbers. In this case, the market's moving lower because it didn't have any reason to rally. Some of the factors that we've seen globally as well as locally in the United States indicate that the markets in terms of economies are slowing down, and we're seeing it reflected here. Now, in the Dow, we did trade through this red line, which is a sell level. And again, I'm not suggesting that you should do this trade or that you would get this kind of return. But the difference between the sell level and the buy level in that market was 942 ticks, which would be $4,710. That's just a magnitude change. And again, I'm just giving you that as a reference so you have a feel for what that change is. My point of view is that we're not looking for a big day down today. We're looking for the market to slow down. We're looking for a relatively quiet day for Monday. Now let's move on and let's take a look at those currencies then. The euro, you would expect it to fall out of bed and stay there. And in fact, what we've seen in these currencies is a little bit of buying that came back in on Friday. Now the issue here is that profit taking, or has that actually gotten low enough to find new buyers? Can't tell from this, but Monday and Tuesday will give us clues about who's here. So how we move in the next 2 days is going to be important. Right now we are looking for buyers to come back into those markets when it comes to these currencies. So that means we're looking for a weaker dollar. If we look at interest rates, the 10-year notes getting much stronger, and it's because where does capital go when it comes away from the stock market? In general, it goes towards interest rates, and that's what we're seeing here. And we're looking for a rest day today in that market, not a big day in the notes. If we look at metals, gold finally had a little bit of a pusher. We've been talking about the idea of buyers coming in at these levels, and finally we've seen some follow through in that regard. So that's a step in the right direction. If you and I were trading gold, that looks pretty healthy. Same thing for silver. Copper continues weaker. China's manufacturing is slowing down a tad bit. That's what the statistics indicate, and the results of that, they're the largest consumer of copper. United States is number 2, Germany's number 3, and if those economies are slowing down, therefore the demand for this product should slow down, and that's part of what we're seeing here right now for that market. Crude oil continues weaker as the dollar was getting stronger. So now we may be stopping here to take a breath. That's what's going to be interesting to see. Supplies are still tremendously high in the United States as well as globally. We don't really have shortages out there. Natural gas continues lower, and we're looking for more of the same, but we have the potential for an equal and opposite here. In the grains, well, we had some rain in the Ukraine, Russia, the plains areas, Kansas, where we grow most of the wheat, or it's one of the largest wheat producing areas. And so we're seeing the results of that. Their expectation is that the crop may be a little better than expected before with the help of this rain. And that's some of this downward pressure that we're seeing here. So nothing telling us to be a buyer. On this market, though, also we could start slowing down. Corn, on the other hand, did trade back up through this buy level, and the difference between the sell level and the buy level here in corn is 49 cents. Now that would be $2,450 is the magnitude change, and again, that's just a reference, doesn't mean anything. But if you were going to trade this market, you have choices. You could trade the mini contract, which is 1/5 the size of this contract. So this is $50 for every penny. That would be $10 for every penny, and it'd be another way to gain exposure to the grain markets if someone was interested in doing that. Well, that concludes today's market studies. Thank you for joining me. Look forward to being with you again. And in the meantime, take care.